Hey, hi. Yeah, in this episode, I just wanted to share with you why I'm still why I'm bullish about the U.S. market, looking forward, especially in the near future, maybe the rest of 2022. First is of course we look at the negative catalyst first. That's like still in the pipeline or things that we can kind of like anticipate right now is of course there's a 7 times of rate hikes by the Fed, which will dampen the market when the Fed is no longer your friend. There's always market volatility, and then of course then there's this recent news on um, the treasury yield rates have finally inverted, and so wait a second. So and then of course then you have 2-year treasury yield tops 10-year rates, a yield curve inversion that could signal a recession. Yeah, this like then of course you got the potential war that's China on Taiwan, or maybe that could be the fourth one. Russia will probably go after other countries. Um, After Ukraine, if there's no peace settlement, which is now the most current likely scenario, is to cut Ukraine into half, and one person takes the east and another person take the west part of Ukraine. And then of course there's this gas supply shock, that Russia may pull a fast one. Of course, now there's a tug of war happening right now. Russia wants the payment to be in ruble, and then European Union and other NATO countries in the Europe that insist on either payment in euro. And of course the continued printing by the Fed, on money that could make things not so good for US. But other than that, right, I see there's a lot of potential. First is what the Russia sanction on Russia actually means for US company. As you know, NATO, they have been doing a lot of trade. Europe has done a lot of trade from energy, wheat, and palladium and all that from Russia, and then of course now, there's you remove one seller, there has to be another seller to fill up the gap, and US is a country that is rich in resources. They got oil, they got gas. Of course, there's this logistic issue that still haven't been sorted out. They have a lot of minerals, natural resources, commodities, lithium and all that. But of course, and now it's actually a good time for them in a very sustained high commodity prices. It makes sense for all those manufacturing companies in US to restart their mining operations. So, and then of course you will see US companies, especially selected sectors like fertilizer stocks, like Mosaic, which I did mention in my earlier episodes. Um, let's say fracking company like Occidental, which is has been purchased heavily by Warren Buffett. They have Lockheed Martin. NATO may go for a defense spending spree to defend their country, or to prepare, increase their annual budget. So who benefits? And it will be US and Canada. They are the least affected by this war. As you can see, inflation, it's something that actually kind of like, it's not doesn't look like it's global, but then percentage of increase in terms of inflation, it's varies from country to country. Of course, it will be a big shocker in countries like Europe, there whereby they use a lot of natural gas. And there will be a domino effect. If the gas and energy prices goes up, right, everything else will goes up as well. And of course, as you know, US only have 3% of import from um, Russia, and it's very easily replaceable with their own consumption, or with their own oil rigs and of fracking company, where they are also able to be the net exporter as well. And then another very good sign is the slow wage growth that's happening right now. You see 1.2 to 1.4. It's only an increase of 0.2. Spiraling wages is actually not a very good sign for which will tend to lead us to think that inflation will continue to trend up, instead of actually reach an inflection point, the peak, and then start to drop down. This slower growth is really, really good. And of course, you need to couple with high employment as well. So recession not necessarily means that it's actually bad. Recession is just a term that actually everyone uses, where a company have successive quarters of lower than previous quarters results or revenue and all that. So generally speaking, I think globally speaking, in US will be the beneficiary of all these things. As I can see, US has abundance of oil, and fracking industry is also big in US. They are the largest oil producer. They can, of course, they do try to contain their reserve, and they do try to speak to the Crown Prince of Saudi Arabia, which doesn't seem to be very cooperative, and speak to people from Venezuela, who are sanctioned countries, on how they see they are able to release some oil supply, so that the price of oil can come down. Um, so pretty much Russia and US and Canada are very insulated. In fact, they are also pretty much the beneficiary. They are the substituted replacement seller in a lot of things, especially to NATO countries in Europe. So uh, so another thing is, for hedge fund managers and all that, with very few places left you can invest in, looks like US is probably a very good safe haven. And as you know, right now in Europe, the stocks and economy and all that still very much in a very volatile situation. So in and plus inflation is definitely will speed up even more, because they're so much dependent. They are like such a huge trading partner with Russia and Ukraine. And then, another thing I like to mention is the reduction of all these goods, and durable goods and non-durable goods is so good, and it will reduce supply chain crisis. And once supply chain crisis reduces, logistic prices will slow down as well. It will at least won't be continue uptrend, because logistic prices, air freight, sea freight, will to continue to go up. That's also a factor that contributed to inflation. And as you can see, if people are shifting towards the allocation of their extra income, discretionary income, they will start to park some in going to Las Vegas hotels or going to Disneyland and all that. So they will then have less discretionary income to spend on goods, less shipping costs come down. And this is another thing that will kind of like make the Fed's likelihood of like increasing interest rates. They might probably delay a bit. They might wait until, when they use the word transitory, this could be happening. Another thing is about the US lifting the tariffs. As you know, imposing the tariff means that whatever things that you import to US is becoming more expensive. It's just that to allow their local industry to compete. Otherwise, Chinese stuff that exports over to US are extremely cheap, and there's no manufacturing company with their US minimum labor wages of like US dollar 10 to 15 per hour are able to compete with, let's say, a US dollar 400 ringgit, $400 a month, in China. So this is something that they have lifted. And lifted means that whatever raw materials are received, are exported from China to US, the manufacturers' input costs also will reduce, and hopefully they will not be greedy, and they will kind of like won't increase the price as much. So everything is kind of like tame as well. So inflation fear generally are easing. As I looking forward, as you can see, unless the war escalate, and all that. Yeah. So ports also kind of like, if you look at the ports, also see significant progress. Supply chain backlog also kind of reduce. The port, kind of like the wherever container comes in, there's all these truck drivers. There was this shortage of truck drivers. And there's coming back in as well to elevate the ports congestion that can make something more expensive than usual. So, and as you know, the next thing is, of course, you get the war fears. Generally speaking, whenever there's a war, even though it doesn't really affect us in countries like, let's say, US that are so quite distant, unless you get like cross-continent missile, threats. That's kind of like not something that is very possible, and that there are more real things to kind of worry about. People tend to save, and people tend to spend less. In That's just a general mindset, the psychology of people in terms of whenever they have discretionary income. When times are good, they spend more. So this is kind of like war fear actually help US as well to bring prices down to a reasonable level, because one thing we want to avoid right now, first and foremost, is inflationary pressure. So all these factors are inflationary pressures, and it's good to kind of like bring it down. Yeah, of course, the Build Back Better kind of initiative by Biden also helps, because they are bringing back a lot of like manufacturing, whether it is Intel chip manufacturing to the white gold, lithium, with opening up the mining factories again. Because they see that this war, or even during COVID, they learned a very painful lesson. They don't even have a manufacturing plant to manufacture masks or ventilators. They have to rely on China. Then if China were to, I'm not sure whether it's intentional or unintentional, decides to tell them that, hey, we are closing our factory because of the COVID lockdown, we can't give you those masks. So sorry, you guys, all your COVID patients in hospital. And then you get this war as well on shortage of things, right? So US are kind of like although all this takes time, but the initiative and the action actually takes are bringing back a lot of industry, manufacturing. So you will see, let's say, Nasdaq 100 or the S&P 500, the companies that are manufacturer, they will definitely benefit, and they will have better growth, and they may have even are able to expand their mines, or even be able to have higher revenue to sell stuff to NATO, because replacing Russia as a seller. And then they have this made in America goods as well. I think they're going to make a little bit of tax incentive for all made in America. So as you can see, this is also considered like a national security issue. You need manufacturing, to exist in the company. You can't everything outsource to China or Vietnam. So made in America. So something that's happening as well. There's another yeah, this is something as well. And there's another initiative by the Biden-Harris plan, which is about I think it's called Bring Back. The words are also similar, but it's about bringing back all the miners, stockpiling lithium, stockpiling rare earth, so that you not only stockpiling oil as a reserve, you do stockpiling other different things as well. These are all the things whereby whenever there's a sudden shutdown in miners, mining operation, or shutdown in factories, or shutdown in Shenzhen, all these supply chain shocks, right? If you have a stockpile ready, like you have a storeroom, you have ready instant noodle, right? Even though there's a lockdown or grocery shops for a month, you have all these things available. So these are the things also they want to have all this based in the US, and logistic wise also they can use train, or they don't have to use sea freight and all that to carry heavy stuff, from one point to another. That can take 3 weeks from one China port to uh, California, and then you got those loading demurrage issue as well. So this is something that yeah, this is to show you that rare earth, and there's I will MP is one of the company that I think is very investable. MP Materials. So made in America, supply chain for critical materials. Yeah, this is the one. So yeah, I'll put the link below, and you can see awarded for MP Materials. They have recycling initiative as well. Of course, under the Biden-Harris initiative, there's always about recycling and green. So yeah, I passed my time again. So yeah, thank you for this episode, and hope you like the episode, and click a like and subscribe to my channel. Thank you very much.